Hi everyone, happy Tuesday. So let's talk about what happened in the stock market today. All of the major indexes fell, and all eyes are looking at the bond market as the culprit. Long-term bond yields spiked, and there are three primary pressures on the bond market that cause this. The first is the steepening of the bond yield curve, whereby the gap between long-term bonds and short-term bonds widens. And higher long-term bond yields signal an expectation of inflation because investors that are going to commit their money for long-term want to be compensated if they expect inflation. So this places upward pressure on long-term yields. The second is the uncertainty around the tariff ruling and the potential for the US government to have to refund those that have already paid tariffs if they are found to be unlawful. If that happens, it places further pressure on the budget deficit and raises the level of risk associated with investments in U.S. Treasuries. And investors expect a higher return with higher risk on U.S. Treasuries. And the third upward pressure on bond yields is when foreign central banks sell U.S. Treasuries in search of safer alternatives. I'll do a separate post on the alternatives that they are looking to for safe haven, but when there's lower demand for bonds, the price of the bonds goes down, which drives up the yield. There's an inverse relationship. So my 2 cents is that we will continue to see some pressure in the bond market, even if the tariffs get resolved, because investors remain concerned about inflation and foreign investors are looking for safer alternatives in light of the geopolitical risk and uncertainty associated with the U.S. government. And rising bond yields are an increased cost of doing business, and this is why the stock market doesn't like it. Let me know your thoughts on other drivers in the comments.